Let's get right to some trader talk on the market from Brian Stutland. He's the founder of Equity Armor Investments. I hope you're having a great day, Brian. Brian, do buyers, long-term investors, want in the market or out of the market?
Well, we're still seeing extreme volatility levels, Angie. And when we look at the marketplace and seeing it swing around back and forth, it's difficult to be a long-term investor and stomach some of that. So that's going to be difficult to take the market higher until we get some lower volatility days. And when you look at the oil markets, especially with them spiking every so often, that's really spooking investors. So we need to see some calm. Now, we did get through some key levels in the S&P 500, the 4,100 level in the S&P. We traded all the way up to 4,200 over the weekend on the futures during the Memorial Day weekend. We couldn't get through that. But let's see, that will be a level I'm watching, 4,200 on the S&P, and the March lows in the NASDAQ that were made. If we can get above those lows, maybe we start to see some buyers start to creep in. But until then, I'm still a little worried about this market.
President Biden met with Fed Chair Powell on Tuesday. Does that matter to the market?
It really does matter, actually, Angie. It's a pretty big meeting and discussion, anything you hear out of the Fed. We heard some Fed governors earlier basically say, hey, we need to get inflation under control, not only just stop it from rising, but actually get price levels back down. So to me, that says the Fed is going to be a little bit more hawkish going forward. Now, if they had some sort of conversation that says be a little bit more bullish or a little less hawkish, that may be one thing that rallies the market. But inflation needs to get under control. And to do that, what that means is probably PE levels, price to earnings ratios on stocks, need to come down. So we need to get better earnings picture here. When we've had recessions in the past, PEs of the S&P forward-looking have been in the mid to low teens. So if we go down to those levels, that means the market's got another 10 or 15% to the downside unless earnings blow it out come this summer. So watch for that as PEs come down. This might be a sideways to sort of bear market that we're installing for if inflation is the main thing that the Federal Reserve and Powell want to get under control.
Thank you for your market commentary today, Brian.
Yeah, thank you.
AM.com for where to see our show on TV.